Here's a number that'll get your attention: $165,353. That's the current inflation-adjusted minimum willful FBAR penalty per account per year. And no, that's no typo, per account per year. If you have a foreign bank account and you haven't been filing FBAR, today's video is going to tell you exactly how the penalty math works, what the IRS looks at, and most importantly, what options are going to exist to fix it before it gets any worse. I'm Chad Silver, tax attorney and founder of Silver Tax Group. We handle FBAR cases, offshore reporting, IRS defense, and everything in between. If your situation involves a foreign account and U.S. tax compliance, this is the channel for you. We handle your FBAR from filing to defense, so you don't have to. Hit subscribe if you want plain English answers to complicated IRS problems. Section 1. What is FBAR and who has to file? FBAR stands for Foreign Bank and Financial Account Report. It's filed on FinCEN Form 114, not with your tax return. Separately through FinCEN's BSA e-filing system. The rule is simple. If you're a U.S. person and your combined foreign financial account balance hits $10,000 at any point during the year, you have to file. Not year end, at any point during the year. So if you had $11,000 in a foreign account in March and it moved it out in April, you still have a filing requirement that year. A lot of people miss that. And foreign account is broader than most people think. We're talking about foreign bank accounts, foreign brokerage accounts, assets held in a foreign branch of a U.S. bank, mutual funds held offshore, even life insurance and pension accounts at foreign institutions count in some cases. Section 2, the non-willful penalty. Let's start with the less scary penalty, non-willful violations. Non-willful means you didn't know you had to file or you made a genuine good faith mistake. You weren't hiding anything, you just were aware of the requirement. Non-willful penalties are up to $16,536 per missed FBAR per year. That's the current inflation-adjusted figure. And here's where it gets more complicated. There's no cap on the total amount. So if you had 3 years of missed FBARs, you could be looking at nearly $50,000 in non-willful penalties alone, even if you weren't trying to do anything wrong. In 2023, the Supreme Court's Bittner decision clarified that for non-willful violations, the penalty applies per form, not per account, which was actually a win for taxpayers, but it's still not zero. The good news, there are official IRS programs, the streamlined filing compliance procedures, and delinquent FBAR submission procedures designed to let non-willful violators come into compliance with significantly reduced or even zero penalties. Section 3, the willful penalty. Now, this is the serious one. Willful penalties apply when the IRS determines you knew about the requirement and chose not to comply, or you were recklessly indifferent to it. Courts have found that willful blindness counts, meaning if you signed a tax return, checked no on the foreign account question on Schedule B, and chose not to look into whether you had a filing requirement, that can be treated as willful. In order to look at that, pull up your 1040 and look at your Schedule B. In the bottom area, it's like Part 3, there'll be areas where you can check yes or no if you had a foreign account. If you check no, then you've got a problem. Willful penalty is the greater of $165,353 per violation. That's the current inflation figure, or half of the account value balance at the time of the violation. And that's per year. And again, there's no cap to it. So if you had $500,000 in foreign accounts and the IRS determines you willfully failed to file for 3 years, we're talking about penalties that could equal or exceed the account value itself. And on top of civil penalties, willful violations carry the risk of criminal prosecution up to 5 years in federal prison. That doesn't happen in every case, but it's on the table for deliberate non-filers, especially if the IRS wants to make an example of you. Section 4, how FATCA changed the game. Here's why I hope they never find out is not a strategy. FATCA, the Foreign Account Tax Compliance Act, passed in 2010, requires foreign financial institutions to report U.S. account holders to the IRS. Yes, this is the narc-out provision. Get it? Narked, like you're narking out your friends or narking out your neighbors, narking out your clients who are your banking clients. How could you possibly do that? Well, the FATCA Compliance Act makes banks do that. Most major foreign banks in most countries are already doing that. The IRS receives data on your foreign accounts, whether you report them or not. The question isn't whether the IRS can find your account, it's whether they decide to look at yours and whether you want to be on the right side of that line when they do. Section 5, what to do if you're behind in these filings. If you missed FBAR filings, here's the honest framework. If your missed filings were non-willful, you didn't know, you made an honest mistake, you likely qualify either the delinquent FBAR submission procedures or the streamlined filing compliance procedures. The delinquent route can result in zero penalty in many cases. Streamlined involves a reduced penalty of 5% for US residents and 0 for expats qualifying for the foreign version, which usually means like you're outside of the United States for 330 days. If your situation is more complicated, you knew about the requirement, you had unreported foreign income, or the IRS has already been in contact with you, the voluntary disclosure may be the right path. The wrong move is to quietly start filing old FBARs without talking to a professional first. I recently saw this with a case, and the IRS basically took out a sledgehammer and smashed them on the hand about this problem. It was not good. And it could have been solved easily if they had followed the advice that we provided them. Choosing the wrong program or doing it incorrectly can make your situation look worse, not better. If you have foreign accounts and you're behind on FBAR, this is not a sit and hope situation. The IRS has more data on foreign accounts than ever, and the penalty math gets worse the longer you wait. Silver Tax Group handles FBAR cases every day. We've helped clients eliminate millions in assessed penalties. If you want to understand your options, reach out for a free consultation at silvertaxgroup.com. Call us at 855-900-1040. All conversations are 100% confidential. When you talk to an attorney, you have an attorney-client privilege relationship. If this video helped, hit like, subscribe, and please leave me a comment. I answer the questions. Thank you. Stay safe and stay compliant.